Hello everyone and welcome to Join the Dots on what is probably the most important video that I'm going to make in this whole series, no matter where we end up. Because this is the point where people have to know what the truth is, not what they're telling you. I've got 5 links here today and I'm going to try and rush through them so that you've got the most information, the most relevant information you can have about what happened last week and what it means to us as we continue our journey to generational wealth. First link, Liberty and Finance, and they are attributing a lot of this fall to the appointment of Kevin Warsh as the new Fed chairman. Okay, a Wall Street insider designed to protect the banks and the system. I think it's too late. I think no one can protect them now, and we're going to come on to that. So 5 minutes 25 though, he still sees people as short, and he still says people are now going to take the opportunity to buy. Technicals are discussed, but we'll come on to that with Gareth Solway. Nothing has changed. The economy is in real trouble, and gold and silver are still the insurance policies. Right, that's Liberty and Finance. I'll link it. You can watch the whole show. Then we go on to Gareth Solway. Now, Gareth Solway is an extremely gifted technical analyst, and he saw the need in this market for there to be a huge correction. But he holds silver because he sees the long journey. It's a very good technical analysis. It's well worth watching, but he's on the journey. So go to link 2, Gareth Solway. Then we come on to Martin Armstrong. Now, most of you have seen Martin Armstrong. He's been around for years. He's got an incredible computer. It tells everything that's going to happen, is his view. I don't quite agree, but most of it is very solid. We've got Martin Armstrong. What does he see? Most of the rally that we've seen today is short covering. So all that rally to date, gold from 2005 to 5005, silver from wherever 25.30 up to 120 at a point, it was all short covering is how he sees it. So we haven't yet had the speculative demand bubble from the people. So we're nowhere near the end of our journey. That's the point. 2 minutes 20, dealers and the whole system is not working. Refiners are not buying as they cannot process the metals. 3 minutes, the perfect storm is still there. No way is this the end of the move or the bubble, as was 1980. Now, 1980 was a fictitious bubble created by 2 brothers who tried to corner the market on the back of gold shooting up because of the Afghan war. Russia invaded Afghanistan, and Martin talks about that, and that's the first person I've heard talk about it when I've said it for years, and everyone has said it was inflation. No! 450 to 850 gold move, 6 weeks, Russia invaded Afghanistan. I remember selling gold at the time. So he sees shortages in metals, lack of refining capacity, sovereign debt crises, wars, dollar mistrust, fiat mistrust. We know all those. So an inflection point, but then it takes off again. So we've had the inflection point all in one day because it coincided with the end of the month. It coincided with the Fed appointment. It coincided with a lot of things that gave the market the chance to think it can corrupt reality. Its last attempt, I think. Martin queries the technical views as we're not dealing with the same market we had before. This time is so different, he says. 5 minutes 57, bang moment, that's about gold in Afghanistan. Like the BRICS now, taking Russia out of SWIFT. We haven't seen the effects of this yet. They took Russia out of SWIFT. No one wants dollar bonds now, China particularly, other countries, India, huge, Japan, huge holders of dollar bonds don't want them. What else can they buy? Gold. Okay, he says these politicians and people are complete idiots, his words, and the consequences are coming. All right, that's Martin. Now we come on to the 4th piece, which is a piece by, it's a site called Alan Hudson. But here he interviews a lady and she tells you what is happening. And it's brilliant, okay? The lady in the body of this piece, so I will link this link number 4, Alan Hudson, all right? There was a 6.5 trillion fall in the value of gold in 24 hours. And the total fall in all the metal prices, because copper, palladium, platinum, silver, gold, they all got smashed. This was an orchestrated campaign. 10 trillion of value was lost. And you saw it in the cryptos as well, Bitcoin, XRP, etc. They all got slammed. So what this lady Laura sees, it's Laura Gorchega, very, very bright. Listen to her. It's only 2 minutes within his piece, and his piece is only 6 minutes, I believe. All right, listen to Laura Gorchega. Banks have massive contracts for March. Massive. They actually delivered 50 million ounces in January, which is an all-time record. But they've got delivery orders for 500 million ounces in March. They cannot do it. It's impossible. There's only 880 million ounces produced in a year. So you can't deliver 500 million in March. She sees that. She sees this as, her words, a faked sell-off. Physical versus real. Physical is 36 dearer than paper. Physical is 36 dearer than paper. Think about that. There's only one of those that's real. It's called physical. Paper is whatever they want to print, but it ain't the truth. Now we come on to the big one, the Sirius report. Okay, and this is a huge piece. It's the best piece I've found, and I've been looking hard for you so that we can find the most. It's called the Metals Bloodbath. Oh no, that's not. That's Gareth Solway. Here we come. This is the Sirius report. Huge silver price slam linked to major Western systemic financial risk. Okay, it seems an oxymoron, but it's not. They are trying desperately to protect the failing Western banking system. This was recorded when silver was 95. Imagine now when it went to 75 and finished at 83. It was a 10 sigma event, which is impossible. It does not happen. So it has to be created. It cannot happen on its own. You can't have a 10 sigma event like this. It's impossible. Okay? Big clues. We're still in backwardation. The spot price for delivery is still dearer than the futures price, which tells you there's a shortage in the market for delivery. So the premium, there's a premium on spot. People haven't got the metal. So who's short? Is it shorting? No. No huge volumes to show that. Is it systemic spoofing, which the Wall Street banks have been fined enormous amounts before, JP Morgan particularly? Are there dealers spoofing? In other words, they set up or they put into the market a fake contract to sell at a very low price, and they pull it just before it actually delivers, or people can trade on it, but they force the market down, because while that market was out there, while that price was out there, people reacted to it. Spoofing. I'm not great on the technicals of that, but I know how it works. March COMEX, here we go. Like Laura said, March COMEX is 500 million ounces short. That's more than a half a year's supply. And they haven't got any because we're seeing backwardation in the swap price. 75 to 80% of trades are now done by algorithms, not humans. This is artificial, it's manipulation, and there's no doubt about that. It's clear to me as the price spreads deal to deal are huge. If you watch, and I watched it Friday, the movement in the prices were just ridiculous, sometimes a cent at a time. It's not possible, not normal, not reality. That's the point. It's not real. 8 minutes. January delivery of 50 million ounces was very high. I mentioned that. Shanghai physical market closed at 130. 130. So on Monday when Shanghai opens, we've got a 130 physical price and we've got an 83 paper price. The physical market was not affected at all. 8 minutes 30, all happening in the paper market. Now think about this, because the buyers, the Samsungs, the Musks, the military, they can all come in now and buy at 83 on the paper market. But will they? Do they trust that market to actually buy and deliver? No, of course they don't. Of course they don't. They trust the physical market. Okay? This is all an attempt to shake you out. This is all an attempt to try and have one last hurrah at protecting the, and they are evil banks, who for 50 years have played this game. They've lost, but they're having one last hurrah to try and protect themselves. And the system, the Fed, etc., have all joined in, I think, because the movement, a 10 sigma event, 10 trillion wiped off metals in one day, not normal, not going to happen, never going to happen. So if it does happen, it's totally artificial. All right, so your buyers are going to come in and buy now, aren't they? But they won't buy on the COMEX or the LBMA because they know they won't get it. They know it can't be delivered. So where will they buy? They'll probably go to Shanghai. Let's see Monday when Shanghai opens. Let's see what really happens. This is a momentous event. When I called the 92 ERM crisis and I was many hundreds of $1 million long, this is similar. This is one of those moments when you just feel everything. One or more banks are seriously in big trouble. The repo might be involved. Now we'll see this Monday. We'll see the data coming out on Monday on the repo market and how banks have had to go and find liquidity. We'll find out. 11 minutes, systemic problem could be revealed that engulfs sections of the Western financial system. Okay, so we might find this Monday, we might find it next week. We might find fault lines that have joined and brought the pile of sand to the ground. Conclusion, this is not possible in any functioning market. Therefore, a crisis is taking place within the system. They have the weekend to sort it. I continued it then. There is no evidence of real metal being sold. No real metal is being sold. No industrial would be dumping physical. Who would dump it? Any industrial out there, who would dump the physical and hope to get it back at a lower price when they need delivery continuity, they need production continuity? So there's no physical metal being sold. It's all paper. It's a paper tiger versus a real physical tiger. Who wins in that war? All right, there must be banks in trouble. Only 227,000 contracts were traded on the entire COMEX Thursday. So it's not COMEX or LBMA. And it is therefore likely to be Wall Street bank issues. Wall Street bank issues. And the last time we had Wall Street bank issues was 2008. But this eclipses the global financial crisis. Remember, the subprime issues, when they were finally added up, came to a 3.4 trillion loss. We lost 10 trillion in metal prices on Friday alone in paper terms. Not possible. Not possible. So we're going to see a lot come out in the next week or so. But I brought you this today, and I want to take you back also to some very simple basics. Join the Dots started in July. And since Join the Dots started in July, silver is 120.6% up. And just since January the 2nd, at the new price of 83, we're still 14% up. 14% up since January the 1st. So in a month we've made 14%, even though it's now 83. So don't lose sight of the journey. The journey is safe, the journey is solid. All of those 5 pieces come back to we're holding silver because it's physical. All 5. Okay, so I'm going to link all 5, push trade to the limit. All right, but come back to the basics. Understand this is not possible. So therefore, there will be massive consequences. And think of yesterday's video about China and what China will want to do to the Western financial system if it can. Thank you very much.